This is Daryl for Thursday, the 16th of March 2016. So I'm the president of DE Asset Management. So today we want to talk about a number of things. So we want to talk about our quarterly report on the markets first. Also, we want to have a company update and also our company outlook going forward for 2017. First, the company update. Our company now have offices in Vancouver and Toronto. An important announcement though is that our company would be sponsored by Monarch Wealth Incorporated, and all our clients could take advantage of our portfolio process in the late summer of this year. So we're expecting around late August to September. Okay, that's very important to take note of first. Now we want to talk about we want to have a report on the markets. So yesterday, which was Wednesday the 15th of March 2017, the US Federal Reserve lifted the target overnight interest rates by 25 basis points, which we usually call a rate hike. So we basically had a rate hike yesterday. So the markets was expecting it. Investors were expecting it. So I think I reported on that last month, where usually the Federal Reserve have rate hikes when they have a press conference. But Janet Yellen made sure at a number of times, a number of appearances, she says, although it's our custom to have rate hikes with a press conference, we could also have a rate hike without a press conference, and mentioned that a number of times. So, and gave a lot of hints that we would have a rate hike at this meeting. So, investors were expecting it, and it did happen, right? We did have that rate hike. But we talk a little bit later on about why there was a major surprise. So the rate hike though was for, as we said, 25 basis points to a range of 0.75% to 1%. But as I was saying before, we had the dollar fell though on that news. Why? Why did that happen? Well, the Fed said in their policy statement that further rate increases would only be gradual. So when the market said that the US dollar fell, and investors were a little bit concerned. But what it was is that the Federal Reserve is basically sticking to their outlook for only 2 more rate hikes this year, and another 3 rate hikes in 2018. And if you remember, in 2016, we only had 1 rate hike, right? So the investing public have been expecting at least 4 rate hikes, right? Why is Janet Yellen and the Fed sticking to only 2 more rate hikes this year? Since we had what we have had with the markets, right? For people who have been looking at the markets, and us, our company, and others who are attentive at the markets, we saw in 2016 the markets just having historic movements, right? We had the Dow Jones Industrial Average hit 21,000, right? The S&P 500 hit the historic high, as well as the NASDAQ. So why then is Janet Yellen and the Fed deciding to stay with their previous predictions? Well, the Federal Reserve do not have conviction, or they don't have belief in this economic relief rally. So they will stick to the previous median interest rate projections. So now let's go to our company outlook, right? The company outlook of DE Asset Management. So we at DE Asset Management support the Fed's opinions. While we have been encouraged with the market movements, the relief rally that we had starting in late 2016, when President Obama was leaving power, we saw the markets started heating up at that point, and when the incoming President Trump announced that he will have a number of stimulus type programs to really boost the market, and we saw the market overheating because really investors were very excited with all these new incentives to really get the markets going. We spoke about them last month. So if you go back to our last month report where we spoke about the different things that he spoke about putting into place, right? One of them was infrastructure spending in the United States, right? I think it's $1 billion in infrastructure spending. So all these things really got investors really excited about the prospects. And so that is why we had the massive rally that we had, right? But going forward, what we are thinking is, well, actually, let's pull back a bit and let's say what we forecast last year. So last year, 2016, our company, we forecast that in 2016 there will be one rate hike, and we were right. Right, we are right. We did only have one rate hike in 2016. But we also forecast that the U.S. growth rate, or the GDP rate, would grow at 3%. But we were not correct with that. It only grew at 1.6%. So then, when you think of going forward, why the Federal... Yeah, so this is why the Federal Reserve decided to stick with their predictions that they had before, right? To stick with their previous medium interest rate projections, because although we had these historic levels that we met with the Dow Jones index and the S&P 500 index and the NASDAQ, really the real interest rate growth that we had last year was, for 2016, the US was what did we just say? We just said 1.6%, right? So this is why too, as a company, we really want to keep a balanced outlook going into 2017. So we believe that we will have 3 rate hikes for 2017, as we already had one here yesterday, and we think we'd have 2 more going forward for the rest of the year, exactly as the Federal Reserve predicted. And we think that the US will grow at a rate of 2.5% for the year. So we want to be very realistic in our outlook. Apart from the rally and just the positive sentiments that we've been having with the market, we have to really look at what is really happening, the real growth of the market there in the United States. Okay, so that's what we're looking at. So we could get a full outlook report from us on the market if when you call in, or as a client. With a client of ours, you will get a quarterly report every month. Included in that report will also be your statement. So remember, this is going to happen late summer this year, 2017. August to September is when we will be resetting up clients' accounts. Okay, so remember that. And you'd be getting every quarter, you'd be getting a quarterly report. Including in that would be your client's account, showing exactly how your portfolio have been performing for that quarter to date. Okay. At this time, I want to thank all our stakeholders for the company. We want to thank the board. We also would like to thank all our employees for all the hard work so far. We also would like to thank everyone at Monarch Wealth. Thank you so much for all the help that you have given us going forward. Okay, and thank you everyone out there for your support. Okay, so meet us back again. We try to have a video next month, but remember, every quarter we will have a quarterly report on the market. We'd also have a outlook if we do have to change our outlook based on market movements. Okay, so thank you very much and have a good day. Bye bye.